beautiful plate made from colorful glass. In the morning, he leaves his home with 100 euros and goes to the manufacturer of the souvenir. Each plate costs 1 euro, so Claudio buys 100 pieces with his 100 euros. He walks to the beach and sells the plates to tourists for 5 euros apiece, and by noon, he's sold out. He goes home happily and repeats the same process the next day. This is one of the main financial statements. There you can find out how much sales a business had in a certain period, which costs, and what was the resulting profit or loss. He sold 100 plates for 5 euros each. That's what we call sales or revenue, which were 500 euros. The plates he sold, he didn't get for free, right? He incurred costs to buy them. Each plate cost him 1 euro. Therefore, in total, his costs were 100 euros. We call this the cost of goods, which we need to deduct from revenue. To keep it simple, we don't consider any other costs for now, like fees and taxes. If we add this up, we can see that Claudio made a profit or net income of 400 euros. The balance sheet shows which assets the company owns, the liabilities it owes to others, and the equity that belongs to the owners. In the balance sheet, the assets are on one side, and equity and liabilities are on the other side. If you draw a line between the two and one on top, it looks like a T. You can see that the left side of the T is just as big as the right side. For money to go to one account, it has to come out of another. We call this a flow of economic benefit from a source to a destination. Both sides are always in balance, hence the name balance sheet. And that is the foundation. Claudio started out with 100 euros in cash. The cash on the left side equals equity on the right side. The balance sheet at this point is in balance. Then he spent the cash in the morning to buy the colorful plates. The plates are what we call his inventory. In the process, his cash got reduced to 0. But in exchange, he received another asset, inventory. He didn't get richer or poorer by that, right? The total amount of assets is still 100, and of course his equity is 2. After he sold the plates for 5 euros each, he ended up with 500 euros in his pocket at the end of the day. His inventory is gone because he sold all the plates to the tourists. At the end of the day, his inventory value, therefore, is 0. He doesn't have any more plates. If we look at Claudio's balance sheet at the end of the day, we can see that the total value of assets, the left side is 500 euros. That's the cash he came home with. On the credit side, we only have 100 euros. The balance sheet is out of balance. As we know, this can't be. Both sides always need to be in balance. So what's wrong here? If we go back to the income statement, we see that Claudio's net income was 400 euros. This will be added to equity. So when we add the profit of 400 euros he achieved to equity, also the right side gets to a total of 500 euros, and the balance sheet balances like it should.